It's getting a little confusing out there, no? Another yield curve inversion, a hawkish Fed, oil prices up and then down, the end of the 60-40 portfolio, or is it the beginning? A couple of days ago, the Fed released the minutes from their mid-June meeting. First, let's get a quick narrative check. Seems we have a hawkish Fed. Hiking into a recession, everyone's sure is on the horizon. And look, the yield curve inverted again. What fools, don't you know every Fed chair since Volcker in the 1970s eased or lowered rates after the stock market fell 20% like it recently did? And this Powell guy hasn't even flinched. If we wanted clicks or attention, if we were selling newsletter subscriptions, we would be saying, or rather yelling, alarmist headlines. But for now, here's a live look at the office. We filmed these videos for you, our treasured clients, and nobody else. They are exclusively for you. And our only goal is to hopefully cut through some of the noise and provide some decent information and context for what's going on out there. So let's get into it. We need to separate the Fed rhetoric from how they actually think. They know the economy is slowing. They know a decent slowdown will solve inflation. And they aren't going to keep blindly hiking forever under these circumstances. But unlike us with these videos, they can't just come out and say what they really think. First, they know their reputation was damaged a bit during the whole transitory inflation phase, so they have to talk extra hawkish to restore their reputation. Second, it's very easy for them to pivot dovish if needed. But if they sound even a bit dovish now, they risk ruining all the progress they made in their commitment to lower inflation. So expect the Fed to use any excuse available to continue the hawkish jawboning to the point they seem clueless about the slowing economy. But, at least in my opinion, is that the Fed isn't stupid, rather this is their best communication strategy under these circumstances. So take what they say with a large grain of salt. All right, unemployment. You're probably tired of hearing us repeat this, but we do it for good reason. So here's your weekly reminder that the unemployment rate is a lagging indicator, meaning it changes after the economy has already changed. See how low unemployment is before every single recession? It's the recession that creates unemployment, not the other way around. And speaking of clicks and attention, let's remind ourselves what the media's goal is. Attention, eyeballs, clicks. That's why we always talk about that bright red banner on CNBC and their fear-mongering headlines. Remember about a month ago, we showed JP Morgan CEO Jamie Dimon first saying the economic storm was about to pass? Then, a few days later, he was talking about an economic hurricane. You think that just happened randomly on its own? We see this all the time, and we want to share a few with you so you can always stay vigilant when wading into any media. Look at this, July 1st, not even a week ago, JP Morgan says oil could go to $380 a barrel. They must know something. A couple days later, Citi says oil could collapse to $65 brought on by the year-end recession. They must know something. Or this, the 60-40 portfolio, 60% stocks and 40% bonds, is done from May 19th this year. Oh wait, 1 month later, the 60-40 is back. You can't make it up. And then there's the crowd favorite Jim Cramer, longtime host of Mad Money on CNBC. Cramer's one of the most reliable contrarian indicators known to man. It's almost unbelievable. Jim Cramer, March 24th of last year, during a strong crypto bull market, he says take half your gold position and buy Bitcoin. Then on November 8th of last year, literally the peak of the crypto market, crypto is gaining credibility. Then, just a few days ago, after the crypto implosion, here he is again on national TV saying crypto has further downside to go. There's no real value in crypto. You cannot make this up. That's why we're here for you. So beware of what they're trying to do to you, how they're trying to manipulate you. And we look forward to seeing you again real soon. Have a great week.